Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Gregory Mannarino. You can find all of his work on his website, traderschoice.net, and I am very happy to have him back on the X22 Report Spotlight. Greg, welcome back to the Spotlight.
Thanks so much for having me. I am really glad to be here.
Greg, thanks for being on. And let's just start off with the housing market. And we've been watching many parts of the economy for these many years. And the housing market seems like it's starting to melt down. From your viewpoint, when you're looking at the housing market, what's your take on this?
The housing market, along with every single other market, except for maybe one, which is the cryptocurrency market, is not real. I've been saying this for the longest time. There's no price discovery mechanism behind anything at all, again, except for probably cryptocurrency, and we'll talk about that later. But again, it's just such a simple concept that people just keep ignoring. Because I don't think they can get their head around it. The average person just doesn't understand what is happening to the markets, all of them, whether you want to talk about housing, you want to talk about currency, debt, stocks, everything. Nothing is real. There's no price discovery mechanism behind it because of the distortions that are now in place, which are frankly, truly of epic proportions on the back of the debt suppression cycle that world central banks have been forcing upon the people of the world for the better part of a decade now. They've created financial Frankenstein. They've inflated bubbles to the upside. Housing is in a major bubble, and inverse bubbles by mechanisms with fakery with regard to precious metals. So again, we're in an environment here of extremes, and this is going to correct to fair value. We're already seeing new home sales falling off of a cliff, existing home sales falling off of a cliff, and they're going to try to tell you that this is all because there's not enough supply. I mean, does that make sense to anyone listening? It's just nonsense. There are houses for sale. People, frankly, can't afford them anymore. That's the issue. It's affordability. And we saw a lot of the same parameters in place the last time that we had a bubble burst. I think we are at the top of a bubble in housing. I would run for the hills right now before I would go buying a house right now. And I'm not saying they're not going to go up higher in the shorter run. They very well might do that, but they could also come crashing down tomorrow. So keep that in mind, people. I think we're, again, in an environment of extremes where nothing is real. There is no price discovery mechanism. There's malinvestment across the spectrum of every single asset class, and it's very frightening.
You know, it's funny you mentioned about the housing market with supply. And I did an overview with Zillow because you can see, how many houses are for sale. There are a lot of homes for sale. And if you really zoom in on some of these homes, their prices are actually coming down. Actually, if you look at it, some of these homes are on the market for a very long time. And it looks like it's very difficult to move these homes. I mean, where I live right now, I drive around and I can see like for sale. And they've been on the market for a very long time. I'm not saying this is happening in every city, but you can actually see what's going on.
No doubt about it. Here too, here in Las Vegas, there's every block you want to drive down has a house with a for sale sign in front of it. Some go relatively quickly and some do not. So there's also the shadow inventory that's the banks want to keep off of their books here. There's also there's another factor here that people don't understand, and I think this has the potential to unfold very badly. When we had the last meltdown, like in 2008, a lot of these hedge fund guys came in and they bought everything at the bottom of that bubble. Now, what has the potential to unfold here once this starts going, and this is just how every bubble works, once housing either starts to lose value a little bit or these hedge funds start to say, hey, you know what? It may be time to liquidate this stuff. We're going to see a surge of properties come onto the market at the same time. And people can only imagine what that's going to do to the price of housing. Just talking about affordability here, and I hope and I would imagine that your audience is smart enough to be following what's going on here with the dollar. I have been covering it in fact, screaming from rooftops for months about what's going on with the dollar in this downward spiral. It's getting ignored for the most part from the mainstream financial channels, but again, they're killing it. The Fed is killing the dollar. They are determined to create inflation. They keep saying this. I've been taking them at their word. I've been warning people, telling them to get out of it. Get out of the dollar, seek dollar alternatives, because the Fed is determined to melt the dollar. That's exactly what's going on here. There's no end in sight here. So you can imagine there's probably still some inflating with regard to some the housing prices. But again, I really feel that we're at the top of a bubble. And then once it starts to break, we're going to see these hedge funds start dumping a lot of inventory onto the market. And I'll tell you something, who else is going to do that? The banks, too, that are keeping this stuff off of their books. They're holding a lot of this stuff. They're going to dump it, too. So you can only imagine how this is going to play out for a lot of people. Most people are probably going to get caught on the wrong side of this. In fact, everyone that's buying a house now is going to get caught on the wrong side of it. I've been trying to, in my perspective, put my perspective on this for a while now, probably about a year or two, where I've been saying, this market is out of control with regard to housing. But again, it just goes back to the runaway central banks, the Federal Reserve. They're still buying everything. People think that the Fed is not in there buying bonds. Of course they are. How do they keep interest rates where they are? Does anyone have a guess? Well, maybe it should be this, because they're getting into the market, taking cash that's been printed out of thin air, added to a digital screen, and buying the debt. That's what they're doing. As a matter of fact, the Fed is now, they're not even talking about their balance sheet anymore. Remember, Janet Yellen kept saying, this year we're going to start normalizing. That's the word they use. It's not Greg's word. It's their word, normalizing their abnormal balance sheet. It's insane, because when I heard them say this, the next day I was out on my channel saying it's not going to happen. The Fed is not going to touch their balance sheet. Now they're not even talking about it. The Fed is so stuck. They have created such a problem for themselves. They never had a plan to unwind this. They never had a plan to fix this issue. It cannot be fixed. And there's going to be an awful, terrible price to pay for this. Again, why? Because we are existing in an environment of extremes with a big fat void in the middle. And that void is where fair value is. So these extremes that are existing on both sides are going to meet in the middle somewhere. And it's going to feel like the world is coming down around us. But all that will be is the market doing its only job, and that is to determine fair value. Finally, the market will be allowed to do its only job. We do not have a free market anymore. Until the world central banks and the Fed more specifically gets out of the way and allows the market to determine fair value for debt, nothing will have a real price discovery mechanism behind it. Look at cryptocurrencies just real quick. Let me touch on that. You can see dollar alternatives, which include cryptocurrencies, surging higher as of late, months and months ago. I don't even remember when I did it. I put an article up on my Steemit blog where I said specifically my price target for Bitcoin was 5,000, and then I said it was going higher. We're almost at 5,000 now. People laughed at me. You know how people ridiculed me when I had said that it was going to 5,000 and above? Well, look, who's laughing now? I think I am. So it's the truth. You got to get out of the dollar. The Fed's killing it. They are really the masterminds behind a scheme that is unprecedented in the history of the financial world. We've never seen this before. They have no plan of escape, no way to realistically normalize their abnormal balance sheet. It's just not there. They're flying by the seat of their pants here, and every time they talk about it, the market decides to sell off. That's why we're seeing the market do what it's doing right now, continue to move higher. They've created an environment where there's nowhere else to go. What are people going to do? You want to hold a unit of debt in this environment, which includes the US dollar, which are being dumped by investors from all over the world? You got to be nuts. There's nowhere else for people to go but the stock markets or housing for that matter. And it's going to inflate until it doesn't, and then it's going to burst like every other bubble before it, and it's going to devastate people. They're going to get wiped out.
You mentioned cryptocurrency, and what is your take on the central bank with cryptocurrency? Are they worried about cryptocurrency because it's a decentralized system? I know they're developing something on their end, but you think they're really worried about like Bitcoin or Litecoin or Bitcash now, or the whole blockchain?
I don't think they're worried about it, because again, why would I say that? There's not enough people who would probably want to hold it. It's not being held widely enough to cause, by any stretch of the imagination, to cause a threat to the dollar. If the Fed felt that whether let's say Bitcoin, the biggest one now, was a real threat, then I'm sure they would do something. But there is no threat, in my opinion, whatsoever right now from a cryptocurrency to the world central banks. Again, they're very thinly held, very thinly traded, despite their market cap, because you can see what happens when you get like a big investor who decides to dump a bunch of it, or buy a bunch of it. You get pretty wild swings, very, very typical of something that's relatively thinly traded. So again, this is no threat whatsoever. It is an asset. I don't want to hear from people telling me that I'm wrong on that any longer, because that's all I've been hearing, and it's just crazy. If people would have taken my advice from when this a while back and started putting some cash here in Bitcoin, in more specifically, or other cryptocurrencies, they'd be doing a lot better than they are right now, holding on to a dying asset, and that is the US dollar.
I remember when they were telling us that, Bitcoin was in a bubble when it was approaching 3,000 and Ethereum was in a bubble. But as we can see, since you're telling us not many people are holding cryptocurrency, it's, if you ask your neighbor, they probably might have heard of it, but they don't own any of it.
Look, what I want people to understand is recognizing a bubble is really not so hard. You're going to hear the mainstream financial people, they're going to say, oh, no one can tell when a bubble exists. Well, that is the biggest load of nonsense I have ever heard. All we got to do is look back upon history, and it will tell you how to determine where bubbles are. Two parameters have to be in place. I want people to pay attention to this. Two parameters have to be in place at the same time, okay? At the same time for people to recognize a bubble. What are these two parameters? The number one thing is it has to be the asset, no matter what it is, must be widely held. For example, housing. Housing is widely held. Number two, it must move above the ability, its price action must move above the ability for the average person to afford it. Again, housing is an example. So housing has both of these parameters in place at the same time. These two parameters do not exist whatsoever with regard to any cryptocurrency right now. So anyone out there, Mark Cuban is a fool, okay? When Mark Cuban came out calling Bitcoin a bubble, I made a whole video about it. I said, Mark Cuban doesn't know what he's talking about, and I don't care how much money he may have. He's absolutely wrong here. Obviously, calling Bitcoin a bubble at 3,000, said it was going to burst here. Now we're almost at 5,000. I don't even know what it was at, 4,200. I have no idea. I don't even pay attention to it. I own Bitcoin. I will continue to own Bitcoin. I will add to my position in Bitcoin moving forward, because I am certain it will gain in value versus the dollar, which is a dying asset. So that's my take on it. Without these two parameters in place, you cannot have a bubble. With these two parameters, which I just covered, you can easily recognize bubbles. And that's where we are with regard to housing. Since we started off with that, I want people to ponder what I had said, because it's not rocket science. It's pretty simple. And history has dictated exactly how we can determine bubbles.
Now, I wanted to move on to the stock market because a lot of people are out there saying, I mean, this is, hitting all-time new highs. I mean, we've seen this before. In 2007, I think it was like 14,000 and change. And if we go back in time, every time it reached all these highs, the market came down. But the market's been pretty high for a very long time. And I mean, we've come to find out that the central banks, and they own, a number of stocks, and they're keeping the market up. Do you think the stock market, do you think there's a problem ahead of us?
Beyond any shadow of any doubt. Absolutely. I really would hope that people would pay more attention to the stuff I put out. When Donald Trump was elected president, I am on public record. As a matter of fact, I came out on USA Watchdog show, Greg Hunter, your friend of mine. I said this was a game changer and the market would hit record high after record high, and this is exactly what it has done. Now, because of the other dynamics that are in play right now, that is, again, the Federal Reserve not being able to touch their balance sheet for as far as the eye could see. Maybe we have one more rate hike this year. I want people to know this as well while they're listening to me, so they can understand that I'm a guy who kind of knows what he's talking about. With regard to the Federal Reserve, ever since they started talking about raising rates, I have been wrong only one time in all of these years where I said the Fed wouldn't raise rates, and they did. So my record with regard to predicting what the Fed is going to do is really second to nobody else out here, period. I don't care where you want to find them, on the mainstream financial channels or on the alternative media. I'm probably the most accurate, and I'm telling people what's going to happen. They cannot touch their balance sheet unless they want to burst the bubble. And there's going to be a point where they are going to allow these bubbles to burst. How do we know that? Because it's the same thing they do over and over again. But hold that thought just a moment. The stock market, what's in place right now for the stock market is, people are probably not going to believe what I'm about to say, but it's true. The stock market is going higher. We're going to continue to hit records here. Why? Because there's nowhere else for investors to go at this point. It's the Fed, once again, who's created a financial Frankenstein. They're forcing people to hold risk on assets because, again, they're suppressing the debt, the yield. Now, the market is trying to dictate fair value, and we can see what's going on with the yield curve. The yield curve is flattening. The yield curve flattening out is not a good sign moving forward. Now, going back to what you had mentioned with the market, it's part of the extreme environment that we are existing in. It is without a doubt disconnected from reality, trading on multiples that we've only seen a few times in history. Not only that, we are now existing at a time where consumer debt is now at a record high. So you can see the writing on the wall. The writing on the wall is, at one point when this does correct to fair value, either by the Federal Reserve's own making, the Federal Reserve, what people need to hear, and I think your listeners understand this, they are serial bubble blowers. They blow a bubble and then they let them burst. The reason for that is very simple. When these bubbles burst, more cash is made faster than when they rise. That's by people who are shorting the market. People are betting against the market, just like Goldman Sachs bet against people who are holding mortgages on their own books. It wasn't just them either. I'm not singling out Goldman Sachs. All the big banks did this. Goldman Sachs paid a fine for it. No one went to jail. And that just won't happen again because they can't. And the big banks understand that they'll never be held accountable because it will shake the confidence in the system, for which the system is only built on confidence that it will function. So they got everyone by the you-know-what. But you can understand here that the market will go higher until it doesn't. Mark my words. I think people, unless you really know what you're doing, don't be shorting too many things here. I was short the triple Qs just up until earlier today. I told people the market looked like it was going to pull back. It did a little bit. I pulled a little profit today earlier when, despite the fact that this whole issue with North Korea, which pushed the stock futures down triple digits, the market did rebound earlier in the day. So when I saw that, what did I do? When I saw that it looked like the market was turning around, I even posted this on my chat. I have a chat room. It's free on my website. I told everyone exactly when I was doing it. I said, I'm buying a large amount of calls right now. So if anyone was in my chat room and got in on that, well, you made money today. Congratulations to you. I think the market is going to go higher here again until it doesn't. So there's nowhere else to be. And when it does correct to fair value, it will probably be chopped in half or less. Now, I know I'm going off the deep end here talking, but I want people to pay attention to a couple of other things. However you feel about this guy, Alan Greenspan, a lot of people don't like him for good reason. He did try to warn people at the top of the last housing bubble. He was telling people specifically that housing looked frothy. Okay, Alan Greenspan came out 2 or 3 weeks ago saying that the debt market is in a bubble, sounding exactly, not just a little bit, sounding exactly like Greg Mannarino has and some other guys for a very, very long time. He's trying to warn people that there's a problem. He specifically said the market is not recognizing it. So here's a former Fed chair coming out saying, hey, you know what? The debt is in a bubble. Meanwhile, you want to turn on CNBC or Bloomberg, they're going to tell you, oh, no, it's not in a bubble. So who do you want to listen to? The cheerleaders here or a guy who actually got it right at the top of the last housing bubble? I would say Alan Greenspan has some credibility, despite the fact that he is not liked for many reasons, which I don't really feel like talking about, but it doesn't matter. The fact of the matter is he is correct. We are in a bubble with regard to the debt, which has inflated housing, which has hyperinflated the stock market, and again caused malinvestment that is going to wreak havoc across the world when this corrects to fair value, which it's going to do at one point.
Do you think when this market comes down, do you think we're going to have a credit market freeze? You think everything's going to freeze up?
Of course it is. In fact, it's interesting that you say that. I wrote an article about that recently. I did a video about that. The whole system is built on credit or debt. So at one particular point, when our credit card is maxed out, what I call the moment of maximum saturation of debt, that's it. It's all no good. We already know that that's no good. The debt can never be paid back. There's going to be a moment here, just like last time, but people don't understand that what happened in the market the last time in 2008 was because we had the credit markets froze. Businesses, profitable businesses, were not able to borrow from each other or from the banks. It stopped. So we're going to end up in that same exact situation again. And being that our system is a debt-based model. In other words, it depends on debt being borrowed into existence in greater and greater amounts every single day, every minute of every day. Once we cannot do that, we're done. The system stops. Everything freezes. There's no cash. There's no nothing. So, yes, that absolutely has the potential to happen. If Alan Greenspan, not Greg Mannarino and a bunch of other guys like yourself too, are correct about the debt bubble, and it is in a bubble, there is no doubt about it. And what we do know about every single bubble throughout history, without exception, and I want people to do their own research to prove that I am correct. Do your own research. Every single bubble in history, without exception, has burst. Why? Because they rise above a level that can be sustained by any means. So what that means simply is world central banks can continue what they're doing until it will just at one point stop. Either the market will just say, hey, we have had enough, or there's the alternative that the central banks say, okay, you know what? We have enough people in this market right now. We can wipe them out. We can really transfer a lot of wealth from one group of people to a very small amount of people, which is going to happen in either scenario. That's all this is. When this corrects to fair value, it's a very simple thing to understand. A large amount of people are going to lose a large amount of cash. And that large amount of cash is going to simply make its way to a very small amount of people. We've seen this throughout history, but never like this. We've never had distortions like this. This is going to hurt people like they have never been, has the potential to hurt people more than they've ever been hurt before. And that leads us to a whole other ball of wax. And that whole other ball of wax is the issue with this being a resource problem. If the system freezes, if the system stops working here and we cannot borrow from the future, that means resources will not be available to people. If resources aren't be available to people, what will that do to the population? Use your imagination. And then what happens after that? The people can be controlled. The people can be controlled easily. The government will offer a solution in their favor. We've seen this before in history, but never on this scale. And this is the problem that world central banks have created, and it cannot be ignored. People need to start paying attention to this. They should have been for a very long time, but none more so than right now.
This fall, many people are pointing to this fall saying, we're going to have a huge amount of problems. A lot of people that are looking at different cycles and things like that. And we also have the debt ceiling, the budget coming up. Do you think this fall is, primed and ready for something big like this to happen?
I think we're primed and ready for it today. We've been primed and ready for this for an extremely long time. Nobody, including myself, was able to really see the lengths and the depths that world central banks would go through to keep all of this propped up. This all should have been corrected to fair value years ago. But through all kinds of mechanisms, back door, front door, and every other kind of way you can imagine, things we don't know about, they've managed to keep the system alive and propped up, because the alternative is almost too horrible to contemplate. If, again, Alan Greenspan is correct, and we're in a bubble with regard to debt, we will end up with a resource issue, which is something that people, I don't even think, can get their head around. I ask people that are listening to just Google this: global debt and the human bubble. Global debt and the human bubble. It's an article I wrote a couple years ago, which will go over the concept of what I'm talking about here. People just don't understand what can potentially unfold. And as always, people can't sit here and say, oh, well, it's never going to be that bad. Well, what happens if it is? If you're not ready at that point, Sun Tzu, The Art of War, always have the high ground. Always be ready for a worst case scenario, because if it comes, you're ready and you have the best chance of getting through it. If you're not, you will be wiped out. You'll be squashed like a bug.
Greg, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
Go to my website, traderschoice.net. Lots of cool stuff there, free stuff for you as well, a free chat room. I hope people start to use it. All my videos are posted there. Pay attention, people. This is a time to really wake up.
Greg, once again, thank you very much for being on the Spotlight. I appreciate it.
Great being here. Thanks.